Okay, guys, so now let's start now. Welcome back for another class. Okay, so last night we discussed about um, the introduction to Forex, the risks and the benefits of trading Forex. Also, we discussed about how to set up the MT4 MetaTrader 4. Okay, now today we're going to dive um, into support and resistance. Okay, we know this is the first aspect that even a beginner should first learn. You must first learn how to trade support and resistance, how to identify support and resistance. Okay, this is the first thing that you must know how to do. Believe me, if you know how to analyze the market, if you know how to analyze support and resistance, or you know how to find support and resistance, believe me, trading will become easier for you. So today's class, I'm going to show you guys how to analyze the market using the support and resistance. So that means any trade we're going to take tomorrow will be based on support and resistance. Okay. So I'm going to do some analysis in front of you guys and prepare ourselves for tomorrow trading. Okay. So like I said, support and resistance is one of the very most aspect thing that you must know as a beginner. Okay, we have been hearing a lot about support and resistance, but we actually don't know what we mean. Well, a lot of people like to define support and resistance as the swing highs and low, but believe me, we have so many things that you need to know about the support and resistance, not just only highs and low. There are so many things that you must know about trading support and resistance. And one of the most important things is that you must know how to draw support and resistance. Okay, you can identify it, you can draw it, that would be better. If you can identify it, you should also know how to draw support and resistance. If you can find it, then you should also know how to draw support and resistance. Okay, so these are what we discussed last night, and today we're going to dive into support and resistance, and how to set up support and resistance. Okay, we talk about the risk benefits of trading forex. I think this is the first foundation. After you have already know what are the risks that involve the forex market, and you also know the benefits that you can enjoy when you start trading the forex market. Now you can now find out what the first step to take if you want to analyze the chart. What is the first step to take? That's why I just make sure that today we're going to discuss about support and resistance. We will not cover everything about support and resistance, but I'm going to give you a clue of how to identify support and resistance. Okay, so okay, these are what we discussed last night. Now, chapter 2, support and resistance. When we talk about support and resistance is one of the most widely used concepts in the forex market. Most widely used concept in the forex market. Okay, when we talk about support and resistance, a lot of traders use this concept in trading forex market, where we have so many ways of analyzing the market. We can use the indicator to analyze the market. You can use um, trend line to analyze the market. You can use any other price action instrument to analyze the market. But mostly, traders use the support and resistance to analyze the market. So that is why today I'm going to show you the in-depth of support and resistance. The simple way to define support and resistance is that support occur when a falling price stop. Okay, the price drop. Okay, the support occur, and once the price stop at a particular level or point, we call that the support. Okay, because the price was supported at that area. Okay, and it change direction. I'm not talking about stop and continue. No, I'm talking about stop and change direction to the upside. Okay, it change direction and begin to rise. Okay, the price might drop like this and then change direction. The price is not necessary that the price should rise to this point. Okay, it's not necessary, and most of the time the price can rise only a few pips before it continue, or most of the time the price can rise up to this point before it drop again. So it is not necessary that you find out how the price is going to rise. Well, that is one thing about trading, and that is why we keep losing trades. A lot of us know how to analyze the market. We know how to predict the next market direction, but we don't know what is going to happen to this trade that we take. For example, if I have already plotted out my support, then I saw the price approaching the support, where we, as a trader, we know that we are buying at the support, right? We buy at the support. So we bought from this support and the price is moving according to our prediction. Then we decided to take our profit around this area. But instead of the price reaching this level, it dropped back, it has stop loss. Okay? The price drop, it's the stop loss. So that is why no one know where the market is going to change direction. Most of the time the market will just continue. Okay, the market, let's say you are taking your profit here, the market will continue, take your profits, then continue upward. Okay, the market might just rise a little bit, something like this, then continue downward. Okay, or the market might just drop once again, testing the support, then continue. Okay, so it depends on how the market is going to move. We don't know this kind of movement is going to occur. None of us know about it. No trader know how this market is going to move. No trader. All we have to do is just to predict that, okay, price is going to a certain level. I'm expecting the price to reach this point before it reverse. You are expecting, but you are not very 100% sure the price is going to reach that level. Okay, if you are not 100% sure the price is going to reach that, that is why we keep losing trade. So that is why we keep losing trade. But nevertheless, there's something that you must know when you are trading support and resistance. Okay, then this is the definition of support. Then why resistance is a price level where rising prices stop. Okay, the price is rising and it stop, and then change direction and begin to fall. We call that the resistance. We call this the resistance. Okay, take a look at this. Here we have the simple definition of support and resistance. The price rises from this point and stop here, and when it dropped, it created resistance. The price again continue moving upward. So when the price fall and stop here, create a support and start rising. Again, resistance and drop, support, rise again. Resistance, drop, support, rise, resistance, drop, support, rise, resistance, drop, support, rise, resistance, drop. Okay, now you see how the price is moving, right? You see how the price is moving, creating support and resistance. Okay, the price is creating support and resistance. It move up and stop and drop, it create a resistance. It move down and stop and rise, it create a support. Okay, most of the time the resistance can be visited twice. Okay, or the support can be visited twice, can be touched twice, or more than that. Most of the time, that is when we have this as the area of support. Okay, don't worry, I'm going to mention something about that. So when you are drawing support and resistance, you must look at the significant high and low. Okay, the significant turning point. Okay, the highs and low. That is what we indicate it as a support. But in most cases, the market usually created what we call SNR, where the buy, where the support become resistance or resistance become support. Here is an example. Okay, look at the chart. Look at the chart. This is the support. The price rise, drop, continue. We have the resistance, it drop again. We have the support, it drop, resistance, it drop, support, it drop, it rise, resistance, then drop, then become support. So you can see how the market is creating support and resistance. But what else can you see on this chart? What else can you see on this chart? We have this resistance, we have this support, we have resistance, we have support, we have support here, resistance, support, resistance, resistance, support, resistance. Okay, because when you are trying to draw support and resistance and you place your line on each of these turning points, your chart will look so rough, it will not be neat. So that means when you are trading support and resistance, you must look for significant high, swing high, and significant swing low. Okay, that is why I couldn't draw any much line, because not to confuse you, so that when I start drawing the all the lines, all the level of reversal, the chart might look so rough. Okay, now what happened when price touches support and resistance? What happens when price touches support and resistance? Each time when price touches support and resistance, resistance level, it strengthens its validity. A psychological barrier exists at that price which will prevent it from dipping below support or crossing an over resistance level. Okay, that is what happens when the price touch support or resistance. Okay, there is a psychological barrier that exists around this level which prevent the price from crossing over the resistance. Okay, the price touch the resistance and then drop drastically, means that there is a psychological barrier that exists at around this area here that allow the price to drop. If you look at the previous chart, you will see how market reacted when they approach a certain level, okay, before they drastically fall or rise. Look at this. The market rises from this point, though it created some correction. Okay, you can see some correction and then continue. And when it reached this level, it dropped drastically, meaning that there's a psychological barrier that exists that allow the price to drop from this point. And when it drop again, it rises to the upside, which means there's a barrier, psychological barrier that exists that cause the price to rise from this area here, from this level. Okay, so you can see each point indicating that the price is being respected, that the level are valid, the level of resistance, the level of support are valid. That is what happens when the price approach the or touches the support and resistance. When price touches any even number on the chart, the psychological pressure are greater. This is another thing that you need to consider, or that you must know when you are trading support and resistance. Okay, for instance, I have drawn in my resistance, then I saw the price rising. Okay, I was expecting that once the price reached this resistance, I place a sell trade, right? I place a sell trade here. But unfortunately, the market reached this level and not able to touch the resistance, and then it dropped. Once the price drop drastically drop like this, It means that maybe the price has already hit all this psychological even number, okay, that causes the price to drop. Well, this is where I set my resistance, but the price reversed here. Okay, which means when price touch any even number of the chart, the psychological pressure are greater. You might see so many rejection approaching here, then the market just reverse. I've encountered so many situations like this. I've drawn my resistance. Okay, fine, let me trade on resistance as the price is approaching resistance. But fortunately, the price didn't reach the resistance before it dropped. Well, I will not be confused. I will still continue. Okay, so but maybe the price might drop, drop, and then finally find its way to the resistance, which means I can still make use of this resistance because this resistance also is still valid. Well, this is the even number level. The price reached the level, didn't respect it again. So that means support and resistance can be not can be broken at any time. Okay, but it head towards this resistance and then it dropped again. First time when the price reaches the even number, so the market react drastically. Now the second time nothing happened unless it touches the major support or resistance before it drop. Okay, same thing goes to the support. Okay, support and resistance price level are derived from a prior price activity view on the chart, where swing highs and low display a reaction of a certain price area. Okay, this is one of the most important thing that must. That means if you have drawn your support and resistance, then the price reaches this level and drop. Again, it came back to this level, crossed the level and drop, and then reach this point and drop. Okay, well, don't not say because the price didn't reach this level before it drop, or maybe it crossed over this level, that this level is not valid. Okay, the level is only valid because even the highest swing high here, even the swing high is displaying a reaction of a certain price area, which means if I should draw my resistance area, I will include this, I will include this, then I will include this. Okay, which means from here to here is my resistance area, which means if the price is about to reach that area or is again reversing to that area, then I'll be looking for a sell opportunity. Okay, I'll be looking for a sell opportunity. The market might just reach this point and reverse, or it might just play around inside the zone and reverse, or it might just head toward the major high before it reverse. So it depends on how the market is going to. That means within this zone is where I'm going to confirm my entry trade. It's where I'm going to confirm my entry trade. Okay, so this is what happens when the price touches the support and resistance. And a moving average can act as support and resistance. A moving average can act as support and resistance, which means if you are seeing if you are if you don't know how to draw or use the horizontal line to draw support and resistance, you can also use the moving average because the moving average also is acted as support and resistance. This is EMA 100 EMA. You can see that when the price touches the 100 EMA, it bounces. Okay, it bounced. Most of the time the price will just flip below the 100 EMA before it reverse, but at times it did respect at the same point. Okay, you can see here it bounced upward, it bounced upward, it bounced, it bounced. This time it only bounced for a while, then break the level, then again come back and then drop. You can see that moving average can also act as support and resistance, but do not rely so much on moving average because of all these false breakout. Okay, so you must try to make sure that you can read the chart, analyze the chart. Okay, moving average, the reason why I like using moving average, I don't use moving average to only I don't use only moving average to analyze the market anytime I'm trading. I don't use moving average to analyze the market. I use like trend line or horizontal line or Fibonacci. Once I identify the support and resistance, then I can use other market confluence using the moving average or using any other indicator to prove or to fine tune that this is my support and resistance. So, which means I'll be expecting the price to make a turn or to make a downtrend or uptrend from this level. So, I don't depends on moving average. I depends on what I'm going to do or how I'm going to predict the market using moving average, also included with any other factor for me to analyze the market. So this is a support when the price bounces from below. Okay, if the moving average is moving below the price and bounces upward, we call it the support. And if the moving average is above the price and bounce downward, we call it the resistance. Okay, you can see how the price reacted anytime it touches the moving average. This is 50 moving average. Okay, you can see. So no trend line drawn here, no horizontal line, no Fibonacci, just moving average. So moving average can act as support and resistance. The next thing is the Fibonacci level. The Fibonacci level can act as support and resistance. Fibonacci level can act as support and resistance. Started from 0, 0, 23, 38, 50, 61, and the 75. Okay, or 78. All these are Fibonacci or psychology Fibonacci level. They can also act as support and resistance. How do you trade support and resistance? Don't worry, I'm going to show you all in the chat how to trade support and resistance using the Fibonacci. So we're going to do some analysis on the trade we're going to take tomorrow. So I'm going to apply all this influence, the support and resistance, the Fibonacci, the moving average. Okay, this is the swing low and this is the swing high. So when I drop from the swing low to the swing high, then I'll be looking at any of the number or level, the Fibonacci level here, okay, to look for any reversal pattern. Okay, so when the price reach the 50th Fibonacci level, what do we see? See so many reaction. We saw rejection. We saw a spinning top. We saw a hammer candlestick. We saw a bullish engulfing. Okay, we have so many confirmation here. Okay, we have so many confirmation. And what happened when the price shows all the confirmation? The market start rising. Okay, from the 50th moving average. Now that is the support. This is the resistance. If you want to draw from the resistance, if you want to use the Fibonacci to find resistance, you must draw from the swing high to the swing low. Okay, draw from the swing high to the swing low. So once the price reach any of these Fibonacci level numbers, then you decided to find and you must confirm your entry with candlestick pattern. Okay, when the price reaches the 50th level, what do you see? We saw first, we saw rejection. Okay, we saw rejection. Then we saw a strong bullish candle, followed by a weak bearish candle, followed by a strong bullish candle. So if you look at this pattern here, from this green to this, it's called the evening star pattern. The evening star pattern. So which means the evening star pattern here is the confirmation. The evening star pattern here is the confirmation. After so many rejection, the evening star pattern here is the confirmation. So you see what happened? Next, the market dropped drastically to the downside. Here, after so many rejection, we have the bullish engulfing. Now, one thing you should know about this is that the first time the price reached the level, we didn't see a strong move to the upside. Okay, the price play around for a while, then formed this pattern before we saw this movement. Which means anytime the price reach the support or resistance, it doesn't make a strong U-turn, maybe to the downside or upside. So, but most of the time it might just consolidate for a while and then drop. Okay, so which means you must pay attention. You must pay attention to what the market is going to do at those levels. Okay, before you place your trade, do not open your trade blindly. So this is the Fibonacci acting as support and resistance. Now the next one is the support and resistance using trend line. This is common. Okay, this is common. A lot of us know about this. Support and resistance using trend line. You can draw support and resistance using the trend line. You can see the price is bouncing from the trend line. First, this is the starting point. Okay, so when the price reaches the second line, second point, it reverse. Here also it reverse, and here also it reverse. You can see the reaction anytime the price touches the trend line, it reverses to the upside. Okay, so here we have the support trend line. Okay, and the support trend line, the price also is bullish. Okay, why this is this downward trend line. Okay, downward trend line, which is the resistance, and the price is bearish. So when the price touches the trend line, it's drop. Okay, it rise again, it drop, it rise again, it drop, it rise again, it drop. So you can see how this is how the market moves or respect trend lines. Okay, this is how the market move or respect trend lines. We have so many ways you can identify or you can draw support and resistance. Okay, so now what are the rules you must follow in drawing support and resistance? The rules that you must obey or the rules you must follow in drawing support and resistance. Rule number one: support and resistance line are zone, not specific point. So expect price to reverse in general area. Support and resistance are zone, not specific points. I'm going to show you in the chart. Okay, I'm going to show you in the chart. Support and resistance. Rule number one: have it in mind that support and resistance are zone, not specific point. So expect price to reverse in general area. Okay, then wait for confirmation before entering a position. When you are trading support and resistance, wait for confirmation before entering a position. Then number three, identify support and resistance area, meaning find area that not only exhibit support or resistance, but one that acts at both support and resistance. That is what most of the time we call it change of polarity. Support becomes resistance, resistance becomes support. These are the three main rules you must follow or you must obey anytime you are trading support and resistance. Now let's go back, let's go to the chart and see how you can trade support and resistance. So I'm going to start from the beginning. I'm going to start from ADCHF, from weekly time frame. Okay, like I said, our analysis tonight is going to base on support and resistance. So I'm not using the demand support. I'm not using demand supply demand. No, I'm not using Quasimodo pattern or maximum pin level. So I'm not using those analysis. But I'm only trading. I want to trade only on um, support and resistance. Okay. So this is weekly time frame. This is weekly time frame. Now on weekly time frame, what can you see? On weekly time frame, what can you see here? We can see the price is moving upward starting from here. Okay, from this point rises to this level. Here it created resistance. Okay, it created resistance. So I'm going to draw resistance from here, and then it drops, this created support, rises again, resistance. Okay, and here when the price drop to this point, created support. rise again, created resistance, and then drop. No, this is not included. Rise again, it created resistance. Okay, you can see how I draw support and resistance. So this is on weekly time frame. Now let me switch back to daily time frame. On daily time frame, this is a support level. This is support level on daily time frame. And we see that the price is approaching the support. If you look at it clearly, you see that the market already break the support level and then make some pullback to that support. So here that means that the support level here it become resistance. Okay, support level here become resistance. That is why the price drop. The price drop created the support. So we have the support here, and then the market is rising again, which means if this is the resistance, the first attempt, we can expect another attempt at the same resistance here. Okay, which means we can expect the buyers again to continue to this resistance and drop. Okay, so in the meantime, the AUDCHF is that maybe we can expect the price to reach this level because this is the resistance and this is the next resistance level, which we can expect resistance 1, and this is going to be resistance 2. So which means we can expect the price to rise to this level before we expect a downward movement. So in the meantime, let me go back to 4H time frame. Okay, on 4H time frame, what can we see? We can clearly see this is an area of resistance. Okay, we can clearly see this is an area of resistance, which means if I'll be expecting price to reverse, I'll be expecting price not to cross this area of resistance. So, which means if I saw the price approach the resistance and break the resistance, then it means that the market is likely to move up. So, in the meantime, this area is where I'll be expecting the price to drop. So, I'll be expecting the price to rise to this area of resistance before it drop. So ADCHF, I'm expecting the price to rise to this resistance before it drop. Remember this, the support area, okay? Which means if the price drop to this level, we can expect the price to drop to this level. If price rises to the resistance and respect the resistance, then we can expect the price to drop to this level. So, but here you don't have to do anything, okay? You don't have to do anything. Know that I switched to to higher time frame. From higher time frame, I can able to locate the significant turning point. But all these are confusion. Okay, all these are confusion, which means there are still some activities going on around here. So, but in the meantime, I can expect the price to rise to this level, maybe by respecting this level for a short while, then continue to this resistance. So from the resistance, I'll be looking for a short opportunity here. So that is on AUDCHF. AUDCHF, you sell at this area, but this is not the time to sell. This is not the time to sell. Don't worry, those of you in the VIP signal group, I'm going to show you the confirmation. My confirmation are usually used in trading or in entering any position. Okay, so that means if according to the rules of trading support and resistance, I've identified that this is an area of resistance, not a single line. I'm not expecting the price to respect any pattern here. But all this area that the market reverse, I'm expecting the price to reverse as well. Okay. So which means if the price rises to this resistance, I'll be expecting a downtrend. Okay, I'll be expecting a downtrend from here. So that is the first rule. The second rule is that when the price reach this resistance, I'll wait for a confirmation. I'll wait for a confirmation. Like I said, most of the time the market might reach resistance and not reverse immediately. For instance, it might reach this resistance, reject, 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 and finally you saw a morning star pattern. Okay, saw a money star pattern that break the previous lows. So if the market make a pullback here, then you can sell. Okay, you can sell to the downside. So which means you wait for a confirmation. Okay, you wait for a confirmation before you execute your trade. You must follow the rules when you are trading support and resistance. Follow the simple rule. AUD JPY. I'm going to show you, I've already done the analysis on AUD JPY, but I use the trend line. Okay, I use the trend lines. I'm going to show you how I come up with the analysis. Okay, guys, so now this is AUDJPY. So I'm going to show you, let's start with the analysis on AUDJPY. So first thing first, I'll switch to daily time frame. Okay, I'll switch to daily time frame. On daily time frame, what I can see is that this is a bullish trend. This is a bullish trend, right? On daily time frame, I'm going to, this is this first swing high. The market drop created a low. You can see that it become a support, and before it become a support, the market created the resistance before it drop, and then market again respect the level and drop again almost, and then finally break the resistance, and it created a support right here. Okay, it created the next support here. When the price created support, it rise to this point, it created the resistance and drop and created the support here. So now I have drawn the support and resistance. Now let me go back to daily time frame. Okay, this is daily time frame. You can see from here to here, I will connect the 2 points from here to here using the trend line. Okay, using the trend line, connected the 2 points using the trend line. Then from here, okay, from this high, using also the trend line. Okay, so what am I seeing here? What is the name of this pattern? You should know that this looks like a symmetrical triangle. Okay, a symmetrical triangle is a neutral pattern. What I mean by neutral pattern is that it is possible the price break the upper side and continue, and also it's possible the price break the down one side and continue. So it is a neutral pattern. Okay, we cannot just identify, but according to this trend, this previous trend, it seemed to be bullish. So which means the price is still bullish. Let's me go back to 4 hours time frame. Okay, this is 4 hours time frame. On 4 hour time frame, you can see that the price already touched the trend line, the downward trend line, which means if the market was able to break this resistance, if the price was able to break this resistance trend line, then I'll be expecting the price to continue to this point, to this level. Okay, but if the price didn't break the resistance, then it should drop and retest this trend line once again. Okay, so in the meantime, this is 4 hours time frame. The price is now at the resistance. What I'm going to do is go to 1 H time frame to confirm if it is good to enter the trade. Okay, so I want to show you how I'm going to confirm a sell order here. Okay, I cannot just execute a sell trade, but I must confirm. Okay, what I'm seeing here is that the market is creating highs and low here, high, low, high. So which means if this is the high and this is the low, then I'm going to draw the resistance, the trend line from this low connected to the next low, something like this, and then the high, something like this. Okay, this is on 1H time frame. Let me go to 30 minutes, or let's say 15 minutes. Okay, remember the price is still at the resistance, and at the resistance, what do we see? Let me adjust it. The resistance, what do you see? A bearish engulfing. Okay, a bearish engulfing. Then we see some kind of consolidation. We see some kind of consolidation. This consolidation, we call it the build up. Okay, the build up pattern. And then at this build up pattern, sorry, someone is trying to log in. Let me add them to me. Okay. So the market is building up near the resistance. So in that case, if you are going to execute the trade, what you must wait for is that if the price should break below this, then and then pull back, then you should look for a sell opportunity. Okay, you should look for a sell opportunity. But if the price didn't break the lower side, or maybe it just continue moving upward, break the upper side, then it means that the market is likely to move upward. Okay, so that is why I'll scale down to lower time frame on 15-minute time frame to check if there's going to be any opportunity to start selling. But at what I'm seeing here, I think there's no opportunity. Okay, there's no opportunity yet. So um, there's no opportunity. That means there's still no opportunity to start selling the trade. Let me go to 1 to 5 minutes. Okay, you can see this pattern. There's still no opportunity to start selling. Okay, so what I'm waiting for is if the price will break below this, then I'll be looking for a sell opportunity. Or if the price didn't break below, then continue, then I'll be looking for a buy opportunity. So that is my confirmation. My confirmation is to wait for the
Wow.
price to break either both side, maybe the downside, okay, or the upper side. Well, it looked like a good sell trade on high time frame. That is why you should not enter trade blindly. You must confirm your entry. You can see that immediately the price reached the resistance, touched the resistance. A lot of traders might have executed the trade. They execute the trade and the market is moving nicely to the downside. They say, wow, they are making profits. Well, fortunately, the market still rise again and then drop again and rise again. What if you sell? Okay, with scaling down to lower time frame, you will able to pinpoint where you're going to place your stop loss. For instance, if the market break the lower downside and then make a pullback, you can place your stop loss here. Okay, you can place your stop loss and then you sell for a short while. Place your stop loss here. Okay, than for you to use the higher time frame to place your stop loss. Okay, so which means AUDJPY, I'll wait for the price to break the maybe the lower or the upper side. Okay, so if I'm using the higher time frame to enter the trade or to secure the trade, the stop loss might be too wide. So I don't want to use bigger stop loss. So I'm using the smaller time frame to set my stop loss. Okay, you can see the price touching the resistance. You can't just execute the trade blindly. You must wait or confirm your entry before you execute the trade. Also, this is the last green candle before the drop. It's also contradicted to the supply zone. Okay, so that is that on ADJPY. Okay, so now let's check card JPY. Card JPY. First thing first, I'll go to high time frame, the weekly time frame.
Vivian,
So now I'll start drawing the support and resistance. The resistance. So I think there's no other line drawn here. The resistance, the support, and the price rise again. It created the resistance, and then it dropped. It created the support. Okay. So now switch to daily time frame. On daily time frame, I can see the swing lows here. So if I should connect the swing low like this, then the resistance here is more like a resistance zone because we have two touches now. Okay, it's more like a resistance zone. Okay, now from this resistance we have next up to reversal point, also here reversal point. Then if I should draw a trend line, something like this. Okay, let's say the 4-inch time frame. Let me check the 4-inch time frame. Okay, this is how it looked like on 4-inch time frame. Now you see that there's a breakout. The market break the upper trend line and then drop again, break the upper trend line once again. So which means I'll be expecting the price to maybe make a pullback to touch the trend line before it move upward. Okay. Okay, maybe by touching the next resistance, maybe by touching the resistance once and for all, once again. But in the meantime, there's nothing to do. You cannot buy, you cannot sell. Okay, if you want to buy, you buy at nearest all this nearest support area. Okay, you buy at this support area. You don't buy here. And if you want to sell, you sell if the price reach the resistance, the major resistance. Okay, this is how you trade support and resistance. You don't just say because the price has break the level, then you want to buy. No. And again, there's still another opportunity to buy. What I'm seeing here is that I'm seeing some kind of demand zone. Okay, which means if the market drop to this level, I can expect the price to reverse. Okay, can expect the price to reverse. So which means I'm still hoping the price should reach this level. So in the meantime, there's nothing to confirm. You can't confirm your trade. You can't confirm anytime you're going to enter. But you have already analyzed that okay, this is where I will buy. This is where I'm going to sell. So if you want to execute the trade, there's nothing you can do for now. You wait for the price to reach this zone or reach this support before you buy. Or if the market didn't reverse and it continued to move upward, then you look for a sell opportunity here. You can see it take time. So in forex trading, you need to be patient. Don't rush. You need to be patient. Okay. Now let's go to the CHF JPY, starting from weekly time frame. This is CHF the weekly time frame. Okay, same analysis, resistance, support, resistance, support. Okay, and here we have the from the resistance, the price drop created support right here, support, resistance, and I'm going to draw the trend line. This is the trend line. This is on daily time frame. Okay, so as the price is now approaching the resistance trend line, let's see what is going to happen on 4-ish time frame. Okay, let me adjust the line. Okay, but I'm going to draw it as a zone. Okay, you can see the second line I drew, it's respecting the market. Okay, this is the first line. You can see the market reverse from the first line as well, and second line also here, which means the market also touches the second line. So the first time the market approach from the support, it rises to this level, then drop again, reverse touching the level the second time. So I think it is best to start selling. Okay, but in the meantime, I need to confirm the trade if this is a sell trade or not. So what I'm going to do, I switch down to 1 hour time frame. Okay, so what I'll be looking for on 1 hour time frame. What am I looking for on 1 hour time frame? I'm looking for confluence that will give me opportunity to start selling, which is I'm seeing some kind of consolidation, breakout, then the price start right from this level. Okay, let's say we have the resistance here also become a support. Okay, consolidation resistance here becomes support, consolidation resistance here becomes support. So which means if I'm to sell this trade, I'll wait for the price to break the support, then pull back and start selling. Okay, that is what I'm going to be expecting on CHF JPY. So, but now let me go back, let me scroll down to 15 minutes to see other confirmation. Okay, the 15 minutes says if I draw a trend line, something like this, what does it look like? It look like head and shoulder pattern. Okay, it looks like head and shoulder pattern, which is we have the left shoulder, we have the head, then we have the right shoulder. So which means if the price break this trend line and then pull back, then I'll be looking for sell opportunity as well. So which means I'm still getting to market confluence. Okay, getting to market confluence. But also if you look at this, we have the drop based drop, okay, which is the supply zone, and the price touches the supply zone, but not, I'm not trading, like I said, this analysis is going to base on support and resistance. So in the meantime, I wait for the price to drop, break this level, pull back, and sell. That is what I'm going to wait for on CHFDPY. So in the meantime, don't do anything. So which means there are so many things that you need to consider first. Okay, I'm looking for a sell opportunity. So I'm looking for a sell opportunity. Already the market have already tapped right from this level. So but we still have some sideways movements. So I'm not I'm not entering the trade now. So what I'm waiting for is the price to reverse to the downside, break this horizontal level, break this trend line, pull back to those breaking zone, then I will expect the price to drop. So which means if the price drop, then there is a complete head and shoulder pattern. This is the left shoulder, this is the head, and this is the right shoulder. Okay, this is the right shoulder. So which means this is where I'm going to be looking to execute my trade. Okay, this is where I'm going to be looking to execute my trade. And let's say I'm going to make up to how many pips? At least 100 pips on this trade. Let's say from here to here. Okay, from here to here, this is 100 pips. Okay, so if I should expect the price to drop to this level, pick up to 100 pips. So this is how you analyze the market. Now let's go back to, so that means CHF JPY is still on our watch list. Okay, so I'll be watching, I'll be looking after CHF JPY, then AUD JPY. Both of them is a sell trade. Well, let's hope so. So let's see Euro AUD. Euro AUD monthly weekly time frame. Okay, this is Euro AUD weekly time frame. So this is the high, this resistance, the swing high, the price drop, created the swing low, and then rise again, created the swing high, and nothing has happened. So we don't know if this is going to be the swing next swing low. So let's go back to, let me switch to daily time frame. Okay, on daily time frame, you can see that when the price rise from this point, okay, it created so many support trend line, and then the market break the support trend line. So which means we can neither expect the price again to rise from this support trend line the second time. But in the meantime, this is what I'll be expecting. Okay, the price break the lower trend line, and let's see the 4-inch time frame, what the 4-inch time frame has for us. Okay, let me check on daily time frame. Okay, so I'm going to draw next trend line below the price. Okay, let's say from here to here. Okay, this is what I'm doing from here, here, and then the price is now at the level. Okay, so I want to capture a movement that will make the price rise to the upside. That is exactly what I did here. Okay, so you see that I didn't just draw the trend line anyhow. So I'm drawing it according to what I want, according to the price movement. Okay, then let me switch to 4-inch time frame. Okay, here we have the previous swing low before the major swing low. Okay, so that means I'm going to draw a zone. Okay, so now Euro AUD now is at the level, right? AUD Euro AUD is at the zone, the support trend line zone. Okay, because you can see how the market is reversing from the support trend line, reverse here, and now it's at the level the third time. And let me find the horizontal area, okay, to make sure that I'm doing the right thing. Okay, here we have a support zone. Okay, we have a support zone here from the last red to the low, so or to the next to the previous low. So we have a support zone. This is a support zone here. I think the price is now at the support zone. Okay, it's now at the support zone. Now let me switch to 1H time frame to confirm if we're going to execute the trade or not. Okay, we already have some weak bearish candle. Okay, we have some weak bearish candle, and 30 minutes we have some bullish entry. Okay, that indicates that the buyers are present. Now we have some bullish entry now on 15 minutes. And if I should draw a trend line, something like this, okay, this is how it's going to look like on 15 minutes. Let's check 5 minutes. Okay, 5 minutes, this is what I'm seeing on 5 minutes. So what I will be expecting, you can see that this pattern is a falling wedge pattern. Okay, a falling wedge pattern is a sign of reversal. If you guys are familiar with chart pattern, a falling wedge pattern is a sign of reversal, whereby we have the downward sloping movement, something like this. Okay, no, it doesn't meet up. It doesn't meet up. Okay, this is what we call a falling wedge pattern. And falling wedge pattern are sign of bullish reversal. Okay, falling wedge pattern is different from uh, bearish flag. Okay, falling wedge pattern is different from bearish flag, something like this. This is what I call the bearish flag pattern, a continuation pattern. Falling wedge pattern also is uh, different from symmetrical triangle, whereby we have the downtrend, we have something like this. uh, Something like this. Okay, we have something like this. Okay, most of the time this kind of pattern will still a continuation pattern, but if you see a falling wedge pattern, it's a reversal pattern. So that is exactly what the market is trying to do here. Okay, it looks like a falling wedge pattern, where the falling wedge pattern has not complete yet. It will only be complete, or the falling wedge pattern will only be valid if there's any breakout to the upside, because we already see a downtrend, and then we see the market is bouncing inside this channel. So if there's any breakout to the upside, then that will be opportunity to look for a bullish setup. So in this case, it looks like a falling wedge pattern. Okay, these two lines did not meet up in the falling wedge pattern. They did not meet up. So if they meet up, it is not a falling wedge pattern. It is a symmetrical triangle, and symmetrical triangle can either be a neutral or a continuation or a reversal. Okay, it's a neutral pattern. So we don't know where it's going to fall. If it fall to the upside, it can cause a false breakout. Fall to the downside, it can cause a false breakout. So it is either we wait for the price to make a move to confirm. So, but in this case, it looked like it's a falling wedge pattern. The falling wedge pattern is a sign of reversal to the upside, especially when the price drop and reach the support area. Okay, it reach the support area. So the price is now at the support area, touching the support trend line, also the support zone. So I'm expecting a bullish reversal. Remember the AUDJPY. AUDJPY is like a rising wedge pattern. Okay, rising wedge pattern. Let me show you. Okay, it's like a rising wedge pattern. You can see the price is moving, creating some sloping movements, rising wedge pattern. So it is when the price break to the downside, that is when you can validate that this is a bullish breakout. Okay, so in the meantime, don't do anything. Wait for maybe the breakout to the downside to confirm that this is a rising wedge pattern. A rising wedge pattern is a bearish reversal pattern, while a falling wedge pattern is a bullish reversal pattern. Don't worry, all this pattern, all the candlestick pattern, all this chart pattern, I'm still going to explain more and more. So this is how you trade support and resistance. This is how you analyze, and this is how you trade support and resistance. Remember, you follow the rule. Okay, don't just say because you check on higher time frame, checking on higher time frame and saw how the market touched the higher time frame level, and then you execute your trade. No, you can see the price is now at the resistance trend line, but on lower time frame, I scale down to lower time frame, it's telling me that okay, the price might likely to fall. So in that case, if the price is going to fall, then that is good. But I can't just execute the trade because the price is at the resistance. No, it's not proper. Can't just execute the trade because the price is at resistance. So what I'm going to do is wait for lower time frame confirmation. So I should wait for lower time frame confirmation. So now all this pattern, all this analysis that we just did now, this is only based on trend line. Now let us make use of Fibonacci, and then Fibonacci levels and moving average. Okay, so let's switch to 1 hour. Let me see, 30, 15 minutes. Okay, 5 minutes. So what I'm going to do is use the Fibonacci level, drop from this high to this low. So it seems the price is already touched the 78.6 level. And then we have a huge rejection. So I think the market is going to drop. Okay, the market is going to drop because we have a huge rejection as draw from the high to the low because the market has break the low. Once the price break the previous low, that is when you draw from the high to low. Okay, if the price break the previous high, that means you draw from low to high. That is how you make use of Fibonacci. and I'm using it at the highest point and at the lowest point, not the body of the candle, the highest point and the lowest point. So you can see that this is the highest point and this is the lowest point. So in that case, the market rejected from 78.6 level and then it dropped. So that's the first confluence using the Fibonacci. So let me check the indicator if there's anything else on the indicator. So I'm going to use the EMA, that's the exponential moving average. So now I'm going to do some settings. So from I will change the first one to 20 EMA, 20 EMA. The color is blue. Second EMA be 50 EMA. Color should be red. Then the third one should be 100 EMA. Then color should be purple. Yes, I think purple is good. 100 EMA. So let me remove the 100 EMA and 50 EMA, but 20 EMA says the price is testing the 20 EMA because the price break the 20 EMA. Okay, I'm using 20 EMA because this is 5 minute time frame. Okay, the price break the 20 EMA and they pull back to test the 20 EMA. Okay, let's see 50 EMA what it says. 50 EMA is supporting the price. Okay, 50 EMA is supporting the price. That means I'll make use of 20 EMA as the confluence. So 20 EMA means that okay, the price was moving downward and then break the 20 EMA, pull back. Okay, so it's likely possible that the price is going to drop according to the 20 EMA. So now I have the 20 EMA to confirm the entry. Okay, which one again? Let's see. I think Euro AUD. Euro AUD. Euro AUD. I think there's no need. I don't. There's no way you can use the Fibonacci. Okay, you can't use the Fibonacci because it hasn't created the highs and lows properly. Still moving sideways here. So let's check CHF JPY. Okay, this is CHF JPY. I think CHF JPY, we concluded that the price should be a bearish movement. So let's check the exponential moving average from high to low. Okay, from high to low here, from high to low. So we look for entry. Okay, it rejected from the 61.8 Fibonacci level. So, and then we see some rejection, which means we can expect the price to drop at least downside. Then also the moving average, I think 20 moving average is supporting the price to go up. Let's check other moving average. Let's see 50 moving average. 50 moving average supporting the price to go up, and 100 moving average supporting the price also to go up. And let's see if there's any crossover. Okay, the 20 moving average is above 50, while 50 is above 100. Yes, but you can see that the moving average is giving us negative information of selling this trade. Well, according to the Fibonacci, that means we are making use of the Fibonacci retracement. Okay, because I'm expecting the price to go down, but the Fibonacci is telling me that the price is going up. But the Fibonacci is telling me that the price should go down, and the indicator is now telling me that the price should go up. So in this case, I'm expecting and will be respecting the Fibonacci retracement. Also, if I'm to use the supply and demand, we have this as the supply zone. We have this at the supply zone whereby we saw the rejection. So I expect a reaction from this supply zone down to the downside. So which means I can expect the price to pull back to this level for a sell opportunity. Okay. So this is how you trade support and resistance. You can see that it's very easy to analyze, but it's not easy to execute a trade, which means you must have to be patient, follow the rule. Well, all this trade I just analyzed in front of you, I'm expecting the price to go down, right? But if unfortunately the price start moving upward, there's nothing I can do about it. So I must accept it that the price is going up, not down. So what I'm trying to say is that if you are expecting the price to go down, well, expect the price to go down the way it wants it to be. So if the price start moving up, don't buy. Don't say because the price is moving up and you buy. Or don't say because the price is moving up, oh, let me sell because I'm going to have a good entry, good chance to enter for my entry to be good, to be perfect. No, this is my plan. My plan on CHF JPY is that price should drop, retest this level, then I'll be looking for a sell opportunity here. Okay, because it gives me head and shoulder pattern. One, because the left shoulder is right here and the head is here, and this should be the right shoulder. Okay, if this should be the right shoulder, then also the Fibonacci indicate that the price is rejecting from the 61.8 level, that is the strong level. Okay, it's rejecting from the 61.8 level after a drop from the high to low. Then that means this is going to be A and this is B. So this is going to be C. So from high to low, then I'll be looking for D at any point or at any level for my take profit level. So in this case, this I'm expecting the price to drop. Okay, the price drop, it has already created the right shoulder. The price drop, break the trend line, break the horizontal line, okay, then make a pullback. Once you make a pullback, then it is good for sell. Okay, so that is the analysis. But if nothing happen and the market keep pushing higher, for instance, I expect the price to go down, right? The market keep pushing higher. Well, there's nothing for me to do about this trade. So I'm not going to take this trade anymore. I'm not going to sell. I'm not going to sell because the price reached this level. No, I'm not going to sell. What I will do is wait. If I see any reaction again on this same level here, then I will look for a sell opportunity. If there's no reaction, if I didn't see, because one thing you should know that if this is a reversal pattern, right? Head and shoulder pattern is a bullish to bearish reversal pattern. But if this is not a valid head and shoulder pattern, the market should go up more. But if it's a valid head and shoulder pattern, then it should drop to the downside, which means the market should go more down. Okay, so that is one thing about trading. your confirmation should be what you expected it to be. If it goes the wrong way, that is not your confirmation. So exist the trade. Okay, and don't say because the left shoulder is right here, then you want to make this as the right shoulder. No, that is not how to trade head and shoulder pattern. If you want to trade head and shoulder pattern, you must wait for the price to break the support trend line, break the support area, make a pullback, then sell. Okay, once before you sell, you must wait for another confirmation right here using the candlestick pattern. Okay, using a candlestick pattern. This time, this is a chart pattern for confirmation. For entry now, I will use the candlestick pattern. Candlestick pattern like evening star pattern, most especially bearish engulfing pattern. Okay, or multiple rejection. Okay, so this is what you need to expect on CHF JPY. Okay, so I think now I should call it a day. Tomorrow we're going to discuss about supply and demand. That is how I'm going to do it. So today we discuss about support and resistance. And support and resistance, we use that for our trade analysis that we're going to take tomorrow. So that means tomorrow is going to be on supply and demand. Supply and demand. Okay? That means supply and demand, our trade also is going to base on supply and demand. Our trade also is going to base on supply and demand. So that's how we're going to be doing it. So until the last day. So until the last day and anytime, then anytime during our Sunday or weekly uh, mentorship program, I'll be able to teach you guys the smart money concept. Okay, the smart money concept, the high city way of trading support and resistance. Okay, the ICT way of trading. This is just a simple way of trading support and resistance. There are many ways of trading support and resistance, but this is just the simplest way for beginner to trade support and resistance. So during our weekly mentorship program, I'm going to show you the ICT way or the smart way to trade support and resistance, like the professional trader do. All these people that trade banks, how they reacted, how they trade support and resistance, how they control the market. I'm going to show you during the mentorship program. But this time, let's just start from the basic. Okay, that's why I just bring out this simplest method of trading support and resistance. It's very simple when you analyze the chart, when you can read the charts using this set method of trading support and resistance. But the advanced level, the advanced level, okay, that one also is very interesting. Okay, once you know how to read the charts using different method, it will be like anytime you come in the market, you make some profit and then you go. So guys, so that means we are stopping here for now, and then we continue tomorrow once again. Then and tomorrow we're going to I'm going to discuss about supply and demand. Okay, supply and demand zone, how to trade supply and demand, how to set up supply and demand. Okay, so I hope you guys really enjoyed, and if you have any question, you can ask now, or if you don't have any question, maybe you have it later, then you can chat me up in the WhatsApp group or Telegram group, then I'll answer your question. Okay, I hope there's no question. So I think let us call it again a day. So see you guys tomorrow. Good night, everyone. See you guys tomorrow. Have a nice day. Bye bye.